Trade shows are cheap.
Are cheap?
They're inexpensive. This is what I don't understand. You spend $2,000 to be able to go to a trade show where your clients are all congregated. They're all going. I look at that like it's free. Right? And even on the lending side, I'd say you just got to meet one person.
Yeah.
There's one deal pays for the whole show. Why would you not go?
Yeah.
Right? So you just need to go. You need to be involved, spend the $1,500, spend the $2,000. It is worth every penny. Even if you got no clients, right? You are planting seeds. And the next time you go, you don't know the person that's approaching you, whether they saw you at the last show. And that's why they're coming up to you today.
For us, a lot of people, we go to trade shows and a lot of people in the team might come back from a trade show. Do we get any, sign-ups out of it? It's like, well, people aren't going to be on the trade show floor signing up for a software. Right? That's not going to happen. But, what ends up happening is 6-12 months later, someone jumps into a demo or whatever it might be and says, yeah, I saw Tom he was on stage. He did this, he did that.
Yeah.
24 months ago. Hey everyone, welcome back to another episode of Mortgage Tech Talks. Today I am joined by Lawrence Schwartz. Lawrence now works at Golden Bell Capital, but he was one of the co-founders of Mortgage Automator, a software for private lenders. We start there. We talk a little bit about how great it was to be their own first customer as they were starting that software, the importance of having a good team around you, and whether that be from a skills or just a financial perspective. We talk about then the transition, how he's gone from Mortgage Automator, which is a software company that sold last April, and now transitioning back to the lending side, why he's coming back and what were some of his motivations there. And then finally, just talking about what he is up to today and the lender that he's working with and the type of deals that he is very, very focused on. It's a great conversation. I think you'll really like it. We'll see you on the other side. Hey, Lawrence, how are you?
I'm great. How are you doing, Tom?
Yeah, no complaints. Just had a late lunch and just catching up, getting my caffeine in now. But other than that, no complaints. Great to have you here. I've followed you guys for a long time. And on the Mortgage Automator side, I know you're doing some other things now, and we'll get into that. But from the early days of BluMortgage, I'd see you guys kind of get up on stage and win all the awards. And I always thought you guys were doing some really great stuff. And so looking forward to this conversation very much, just to pick your brain as much as I can on kind of, your secret sauce and how you got to the level of success that you did. But maybe just to start, for maybe some of the folks who are a little less familiar, what's kind of, I guess, let's again start on the Mortgage Automator side. What's the elevator pitch? If someone's like, what's this Mortgage Automator thing? What should they know?
Well, I mean, at this point, I don't know exactly what's going on there over the last year because I'm not there anymore.
Yep.
But
yeah.
I'll say that at least at the time when I was there, I can't speak to them now, but, for a private lending company, I don't think there's a better solution out there personally. And even though I'm not there now, being a lender, I use the product.
Yeah, sure. That's telling, right? That's very telling.
I mean, I had an opportunity for the first time in my life to go and scour the internet and see what else is out there for a solution for lenders. And ultimately, that's not good to continue with Mortgage Automator. But I mean, I think they just do a great job, all around.
Yeah.
No matter what.
I mean, it's for us, it was funny, like a bit of an anecdote. You reached out actually to the team here at BluMortgage, just, hey, what do you do at BluMortgage? Yeah. Kind of went down our sales funnel a little bit. I didn't know this actually when we did the prep call. So you're hearing this story for the first time, but you obviously know it. And we kind of got into it. We said, hey, for BluMortgage, we're more on the broker side. For private lending, you said, okay, I'm a lender. We said, okay, well, you should check out instead Mortgage Automator. And you said, well, actually, funny you say that. I'm one of the founders. So it was a bit funny, bit of egg on our face, I guess, in that we were saying that to one of the founders there. But I just thought it was funny. Yeah.
Yeah, I mean, listen, there are a lot of solutions out there, right? And I think that every solution excels at their own, but they're good at a certain piece, I would say.
Yeah.
And I think every solution out there has negatives.
Sure.
There's no perfect solution. I think that companies that used to come to us and look for the perfect solution, I mean, it just doesn't exist. I mean, Even before Mortgage Automator was a thing and we were building it for our own lending business, it didn't even do everything that we would want it to do for ourselves, right?
Yeah,
because
of course,
there's so many nuances in the lending business and things change over time. And I think it's really difficult for any company to hit every single mark.
Yeah.
But if a company can do 80% of it, 90% of it well, I think it's good enough.
Yeah.
I think it's good enough. Just touching on what you were saying, when we did a rebrand, we have a new lending company, and I had an opportunity to look at all sorts of different software platforms. So yeah, I didn't know exactly what you guys did, and I reached out. Same way I reached out to a number of other companies as well. And I think some companies were surprised to see me reaching out, but there's no harm in seeing what's out there.
Harm. Yeah, absolutely. Yeah, it's I think that's such a good point of the curiosity, and also going back to your first point about the software. I mean, it's something that we struggle with, and I think it's a good message for anyone who's looking at software. Is we run it all the time where BluMortgage or whatever, it doesn't matter the solution, will do 80, 90, whatever percent you want to pick, but a high percentage of kind of things that will help you. And then people, and it's human nature, I think, will look at the 10 to 20% that you don't do and say, well, no, I can't, I could never possibly use that software because of this 10 to 20. And you're screaming in your head saying, but we just saved you whatever, this 80 or 90. And, I think it's an important way to think about software, I think, in general, which is there's always trade-offs, right? There is no that perfect solution. And it's difficult to make because if there was a perfect solution, it'd be an easy decision, right? It does make those decisions harder, but, it's important to really kind of weigh those things. And to that point, it's different for each person too, right? Like for you, Lawrence, what makes sense, of that 80, maybe that last 20 is really important. So, okay, this, whatever, but for the next person, that 20%, who cares, right? So it's very person specific. I guess maybe just going back to, me kind of pumping your tires here a bit, talking about all the awards you won. And, it's absolutely a success story, what you guys have done with it, what you did with it. I know you're not involved now, but, I guess one thing that I think people would be curious about listening is, I think there's a lot of people who are entrepreneurial mindset. I think that is very inherent in the mortgage space in general. And people always want to look to success stories and say, how can I replicate that? So, I mean, maybe to start, what do you think was, if there was one, kind of that secret sauce? Like, so many people go out to try and build, mortgage software, and most don't succeed, but you guys knocked it out of the park. Was it one thing? Was it a million small things? Like, when you think back to that, what do you think was really the thing that made you guys successful?
I think that we had an in-depth knowledge of the space really helped us from the beginning, right?
Yeah.
We weren't software developers just trying to figure out, what space should we play in? What market is lacking in the software world, right? We literally built a solution for our own lending business.
Yep.
That was why the software was built right out of the gate. And then when we saw that it was working for us, we figured, well, it's probably going to work for some other people too. And, surprising to us, it didn't work for other people out of the gate, right? So we found out very quickly that a solution that works for our lending business maybe doesn't work for the next lending business. So that was a big wake-up call early on that, every lender is different, and we have to kind of build this product to be flexible and, fit into different places, right?
Yeah, absolutely. I mean, it's, the first point, the fact that you guys were kind of your own first customer, right? And it's, it's kind of that concept like, lean startup. I don't know if you read that book, where it's like, okay, what's most important than anything is just getting those cycles in of customer feedback, right? It's like, don't spend 2 years, like you said, be an engineering company and try and build this perfect solution. What's more important than anything is that feedback. And if you can be both, the person making the software, but also the person giving feedback, that loop is so quick, right? Like, it's so, like, I would imagine in those early days, you can correct me, but probably, it would be like, this doesn't work, and it'd be like fixed, I don't know, like probably within days or I don't know, you tell me, but that hours, right? And, those quick cycles are so important, so that's interesting. And then you talked about, okay, going to different people. I'm curious, like, in that moment where you guys, like, when you went to other lenders and people were like, it's not a fit, were you like, oh crap, well, I guess that's the end of the software? Or were you like, no, we really got to make this flexible? Or did you kind of have the mindset of, well, no, that lender is doing it wrong, so we got to tell them the best practices in order to, use the software effectively? How did you kind of navigate that? What were kind of your thoughts as you were getting maybe not the feedback you expected initially?
There were certainly lenders. Yeah. There were certainly lenders out there that we felt were doing things in a not so great way. Right. And there's definitely areas where we could teach what we were doing because we had a successful lending business. And they just never thought about doing things that way, right? So I'd say that definitely did happen. And then there were situations where the software just didn't work for that type of lender. It wasn't that they were doing something incorrectly. But we didn't say, well, I guess that's the end of the software. We said, well, let's go find more people who the software will work for.
Sure.
Right? Like, so we definitely just tried to find more lenders like ourselves to get on the platform, not completely disregarding the other lending companies, but just understanding what they were doing and, marking on that list, on that roadmap of things that we needed to implement.
The features.
Yeah.
Interesting.
And I'd say a lot of the aspect of it not working was mainly on the payment solution side. So servicing loans. So the companies would still be able to utilize the front end of our platform, just save them time in terms of generating documentation and that sort of stuff. And, more times than not, maybe we would give them the software for little to no charge to get them to use it until we were to implement the features that they needed to run their business.
They cared about.
But I mean, listen, there's, like we just said, it's not going to work for everyone, but we wanted to hear everyone out. We wanted to take their feedback and take it seriously because we wanted every client as a customer. Nothing made us more happy than to go to a trade show and look at all the exhibitors and be like, we have 20% of the people. And it's like, the next time you go, it's like, we have 35% of the exhibitors. And then you just look around the room, you're like, everyone is using our platform. That's pretty cool, right? So,
and then you don't have to go anymore to these trade shows.
You always got to go. Because listen, there is always another software platform that's going to pop up.
That's true.
Yes, that is the reality. There's someone in their garage. Well, not in their garage anymore. That's old days. But there's someone in their basement, making the next great piece of software. And if you're not there and they pop up, they start to like plant little seeds.
Just
we did it. We were new at one point. When we went to the U.S., no one knew who we were. But you plant those little seeds, and the next time you go back, they start to sprout. And, then you have all the clients.
Yeah. It's, it's a good point. I mean, it's a long game for a lot of these things, right? Of just like, hey, maybe it's not this time, maybe it's not the next time, but we're going to be here. We're going to keep showing up and we're going to keep innovating. I think that's what a lot of people, want to see too, right? If you're running a mortgage business, you want to say, okay, maybe this platform has whatever, like we were saying earlier, the 80% and the 20, but hey, they're doing stuff. Right. And that's exciting. And that's something that people want to get a part of too. Right. It's like, hey, there's this growing company that more and more people are using. That's, I mean, obviously that's what's exciting to people.
Trade shows are cheap. They're inexpensive. This is what I don't understand. Right. Like, seriously, I don't understand. You spend $2,000.
Yeah. If that, right. Yeah.
If that, 1,500, 3,000, whatever the number is, right.
Yeah.
To be able to go to a trade show where your clients are all congregated, they're all going.
Yeah.
Like I look at that like it's free.
Yeah.
Right. And even on the lending side, early on at our lending business, I'd say you just got to meet one person.
Yeah.
There's one deal pays for the whole show. Why would you not go?
Yeah.
Right. So, I remember I did a video about trade shows, and one of them was like, you just need to go. You need to like be involved. Spend the $1,500, spend the $2,000. It is worth every penny. Even if you have no clients, right? You are planting seeds. And the next time you go, you don't know the person that's approaching you, whether they saw you at the last show. And that's why they're coming up to you today, right? So I don't know. It was always a no-brainer to me. Go.
Yeah, it's so true, right? It's like, for us, a lot of people, we go to trade shows and a lot of people in the team might come back from a trade show. Do we get any, sign-ups out of it? It's like, well, people aren't going to be on the trade show floor signing up for a software, right? That's not going to happen. But, what ends up happening is 6-12 months later, someone jumps into a demo or whatever it might be and says, yeah, I saw Tom he was on stage. He did this, he did that 24 months ago, right? And it's just... the tough part with it, I think, is just to, I guess, make sure that you're on the right track or getting enough signals, right? Because it is a little bit of a leap of faith. Not completely, like you said. The math starts to make sense pretty quickly, but it is a little bit where you can't say I spent $3,000 and I got, that person signed up at the trade show, but you got to put enough goodwill out there, right? To just say, hey, I'm putting faith in the process, putting faith in the universe, so to speak, and it'll eventually come back. But you obviously got to have those markers along the way too, to say, okay, what I'm doing is the right thing. I guess that's maybe a question for you is, as you guys were kind of on this steep growth curve, or maybe not before the steep growth curve, but in those early days, what were the signs for you that you were like, hey, this is good? Did you have any of those like, holy crap moments where you're like, that's pretty cool? Like this random person just reached out. Like, were there little signs that made you guys think you were on the right track there?
It's a good question. I would say that, using it ourselves, right, and seeing new features come out that we were using, I didn't even need to really see the other company's utilization to know whether we were on the right track or not. I just felt like if we kept using more features,
Yeah.
other people have to like this too. I would be shocked if, I'm a pretty big critic, even of our own work, right? That,
Yeah. Sure.
If I was using something and I loved it, how could someone else not love it? And then you start to just see customer count continue to grow, and you kind of know, you're on the right track. I would say that one thing for me, which really stood out, is when we started to hire salespeople and they were able to sell the product as well.
That's cool.
That was very interesting, right? Because it's one thing when you're an expert in the field and you can jump on and you can speak the lingo, and, you're talking to a lending company that maybe has 20 million on their balance sheet. And I say, well, I use it and I have 100 million. So
there you go.
Good enough for me. Yeah, it's probably good enough for you too. To someone who maybe doesn't have as much experience in the field or none at all, and they're able to go through that demo and ultimately sell company. I mean, I was
That's cool. Yeah, that's pretty interesting. It's, it comes back to what we were saying earlier too, how you're saying, well, some lending companies maybe we're doing it differently. And I think it's also what we always say here is like, you're at the end of the day, you're not selling software, or you're not. It's not, you're selling, as I like to put it, like a solution to a problem, right? So if you can bundle that up to say, this is a problem you're having, and yes, my software will help, but also the expertise that I have from whatever being 100 million versus 20 million, I've kind of gone through those painful moments, learned these things the hard way that I can give you a shortcut to, that's exciting to people. And so, yeah, I mean, totally get it there. But to your other point, I guess it's also, hey, when someone else can also then craft that same message, that's when the wheels really start turning. Talk to me, I guess, a little bit about, I'm curious on, I guess, one thing I hear a lot, there's a lot of people who listen to the podcast who want to start software businesses, but they have a tough time transitioning, right? So they're a broke, very similar type thing where they might, let's call it a brokerage. They are doing, they're brokering as they do. They see a problem. They address that problem, usually maybe starts with a very complicated Excel sheet. And then they start to say, well, if I have this problem, other people might have this problem. And then, off we go to the races. Let's maybe build this into a software product. But what's really hard for people is to say, well, especially if the software side of things really starts to take off, how do I balance these two things, right? Okay, I had this lending business that sounds like for you guys was still very successful, but now you have this thing over here that's, starting to look like this, a bit parabolic, like that hockey stick. Was that a struggle for you guys ever? And how did you know the right point to kind of know that, hey, I need to focus over here versus over?
Sure. I'd say that we were lucky in the sense that, we had a lending business, but we had a third partner and he didn't have a lending business. And his business was being in Mortgage Automator, making sure things were getting built.
Yeah.
Right.
Interesting. Yeah. How did you find this third partner? Because I think that's another very interesting.
He originally, we hired him to build the software for our lending business originally.
Exactly. Yeah.
And they had a software development company, and the partners, him and his partner, they kind of, I don't know, they had a disagreement or they weren't seeing eye to eye, and he was leaving. And we said, hey, this may be a good time to bring him into the fold and start a business.
Yep.
And so, to answer your question, at first, there was no jumping into the software business. We were still running our lending business and providing our expertise in terms of what to build. And he was executing, right? I mean, long days, long nights of testing because someone needed to test, right? And I'd say I took on the brunt of that early on. But I'd say what really pushed us over to the software business was COVID.
Interesting. Okay.
We were in our lending business every day. Our software business was just in the building behind me, actually.
Sure. Okay.
But my partner now in the lending business, who was our financial backer early on, COVID came and there's a lot of uncertainty. And he said, let's kind of put the brakes on a little bit and take a break from lending. And that was months.
Yeah.
And, we're not lending.
Yeah.
Go across the street and we never came back, even when he said, hey, we're ready to, we're lending again. No, we're over there now.
Yeah.
And, I thank our lucky stars that we had such a great partner that would allow us to take the 4 years.
Yeah.
Right.
And he's saying your financial partner that allowed you guys to do this.
I mean, listen, our financial partner and he ended up pretty much running the lending business for us. Yeah. We're collecting paychecks every month.
Yeah.
We're across the street. So a big piece of it was, when we left, I mean, I think our business from the time we left to the time we came back, I think the business doubled.
Yeah.
Oh, and that's not, because of me or Joe, right? This is because they were able to keep pushing along and getting it done. And I'm very, very thankful to have a great partner like that.
It's pretty interesting. I think a couple of things that stood out to me in this whole story so far. Well, one main thing is just the importance of finding that right team, right? Because I talk about, okay, how did you know how to balance these two things? Well, I had a partner that was, the software guy, for lack of a better word. And then we had a great partner who was a financial partner who was able to provide maybe that financial overhead, those paychecks, as he put them. And I think it's such a good point, and it's something that even I'm realizing in our business now is the importance of bringing in the right people. I think that, I don't know if you would agree with that assessment, but I would, in this very short kind of story so far, it seems like that's one of the big themes for you is just, finding those people that are going to help you, I guess, take you to the next level, but also, I guess, kind of challenge. I think maybe that's the right word, your preconceived notions, right? Because it's such a easy thing to just get caught up in the inertia of your life, right? Where it's just like, this is what I do. And, maybe that was COVID for you guys. And maybe that's something that's lucky, I guess, that kind of broke up that inertia. But I think barring a global pandemic, the next best thing is probably just really good people to kind of, grab you by the head and shake you a bit and say, hey, this is it, the way it needs to be done. Curious your thoughts on that.
I would agree.
Yeah.
I would agree with you, but I would also say that an individual that's a good partner for one person may not be a good partner for another.
Sure.
Right. So you really have to, be on the same wavelength, or at least have an understanding of who this person is.
Yep.
Because you may be able to, I don't know, balance this person. If they're really aggressive, you may be, not so much, and you guys kind of meet in the middle. Right.
Yeah.
So, I think that you have to vibe with that person that you are planning to work with for hopefully a very long period of time.
Yeah. I mean, go ahead. Yeah.
Yeah. I was gonna, someone who's a good partner for you, it's just maybe a terrible partner for somebody else. And it may be because they're too much alike. Right. And I feel like there just needs to be a good balance. If there's not a good balance, chaos will ensue.
Chaos ensues. Yeah. Yeah. It's, if I always hear, but I've heard about this a couple of times. I've heard of it where people flash up pictures of their kids and they measure the response. Okay. Kid. They look at the signals, and then they flash up a picture of your business and they measure it and they say, oh, it's same response. Right. So for a lot of people, their business is like their kid. And to that point, the people you go into business with, your partners, well, it's kind of like you're married to these people, right? Yeah. Because A, you're going to be spending a ton of time with them, but B, especially as if it comes to a point where you're, looking at any type of liquidation, you're making a joint decision with this person, and it could be the biggest decision of your entire life, right? So, it's finding those right people. And, I don't have a magic wand or a perfect playbook to find the right person, but I think it's to your point, the more you can know about them. Like, I know people who have, in the process of hiring someone, met the wife, right? Or met the spouse because, hey, we want to know if I'm going to go into bed with, on the business side of things, I want to see what they're like at home, right? I want to see that full person. So it's pretty interesting. Let's switch gears then. So I know that we've spent a lot of time on the Mortgage Automator side of things, and I still think that, of course, you guys are such a success story, and I congratulate you again. But now you're kind of wearing a bit of a different hat. You're kind of come back to the home base here. I guess, talk to me a little bit again now. That's just another transition. So a lot of transitions here from lending to the software. And then, hey, now it's okay, software back to the lending side of things. How did you kind of know that was the right time to maybe make that leap for, I'll just ask you personally, maybe what kind of felt like the right thing, or were there certain things going on that you said, hey, now's the right time to maybe transition back or make a new transition here?
For sure. So, I mean, I've always been an owner in a lending business, even when we were working Mortgage Automator. So where I'm back full time and I'm putting 100% of my effort into the lending business, I feel like I've always kind of been doing it.
Sure. Yep.
It just hasn't been consuming my days.
Yeah.
But, it was always known. Like I always knew that once we sold Automator, make the money work for you. Where's a better place to do that, which is back into the lending business, right?
Yeah.
So I always knew I was going to go back when was up in the air. I took the summer just to, unwind a little bit from a long,
lots of golf
time.
Sure.
Yeah. But it's, I thought, I'll sell this business, and golfing every day sounds great.
Yeah.
You know what? It's not that great. You want to be able to challenge your mind. You want to get up and have a goal and accomplish things.
Yeah. Well, yeah. Dig into that a bit more, because I'm curious. Because again, I think that's what you hear all the time. I'm going to start this business. I'm going to sell for $1 billion, and I'm going to go off into the sunset. And you guys kind of did that, and you're not on a yacht right now. At least not that I can tell. Maybe there's a very, very tall yacht with a with the skyscraper in the background, but. Yeah, talk to me a little bit about that, because I think it's a very interesting thing. Me personally, I'm curious about is, was this something you kind of realized on the golf course a week in, a month in? Like, talk to me about that. Hey, yeah, just kind of puttering around, for no pun intended, didn't quite check the box for you. Like, talk to me a little bit about that journey, if you can.
For sure. I mean, I think it was great to be able to spend more time with my family and pick my kids up from school. I drop them off every day anyways, right?
Yeah.
But yeah, being around is definitely, a plus, and it was wonderful and it's great, but it's tough to, sit at home and look at a wall, and not have those thoughts of waking up in the morning and saying, like, what am I going to accomplish today? Yeah. Right. And I think for me, that was really important. From a financial aspect, sitting on a yacht and, just hanging out and stuff. I mean, we sold the business in April of last year. You can ask what I bought myself from that sale, and the answer is nothing, right? I'm just not, I don't want to say I'm not money motivated, because, we all are. I love to make money, but I'm not motivated by things. I just, if you were to come to my house, I don't have a lot of things. I'd say I'm somewhat of like a minimalist at heart. Like, I don't collect anything.
Me too, actually. Yeah, my wife's listening. She'd agree. Yeah, go ahead.
It just doesn't do it for me. It just doesn't. It doesn't do it for me. So, the lending business was successful before the software company. So it wasn't like, I went from zero to selling this company. Like, I still had a great life, and I had a great income, and nothing from the sale other than knowing long-time security for, me, my children, and maybe their children. Outside of that, it just, nothing is really changed.
Interesting. No, it's so interesting. I mean, a couple kind of themes I would pull out of that is to say, I think something that's really, really important is to draw the distinction between producing and consuming. Right. And I think people mix those two things up sometimes. Like, I think the amount of money that you have in the bank, that's actually more of a proxy of what you produce. Right? Like, hey, I'm going to work at this job. I'm going to provide some value there. I get a salary. I produce that. Right. And then the flip side of it is, okay, based on what you produce, you can consume. And over your lifetime, you should hopefully produce more than you consume. And sometimes those get jumbled up. I think money sits in the middle, like the actual, dollar account in your sitting in your bank account get mixed up. But, that's what I hear a lot of, where people get fired about the producing side, not necessarily to consume it later, but just to say, hey, you know what, this is what excites me, right? It's not going to the golf course. It's not this. It's it's bringing value. And I think that's actually just a kind of an interesting thing. I don't know if you agree with that. That's more philosophical, I guess, but that's how I kind of think about it. And
Yeah,
I like to draw those lines if I can.
for sure. Yeah, no, definitely, I do agree. I mean, listen, it's definitely an interesting one for sure, right? And I think everyone's different too, right? I think
Oh, that's
that,
true too. Yeah.
you know, some people love things,
Yeah.
they just
Yeah.
love it. And I've no issue with that. I've nothing against it. Everyone should live the way they want to live and the way they're comfortable living, right? And I think that
Absolutely.
that's an important thing, I think, with people is you should just live your authentic self.
Yeah.
You know, you don't have to go out and buy things because you can. If you don't want to do that, if you don't like it, then what's the point? Who do you want to impress? But just want to, live the way you want to live.
Yeah. Yeah. No, I know it's great. And it's great to have that perspective for someone like you when, you just talked about generational wealth, if I can paraphrase what you were saying earlier, but you have that perspective still, which is pretty cool to kind of see that. Let's talk a little bit, if you don't mind, Lawrence, just about the lending business. Cause okay, now you're back, but I would almost, tell me if I'm wrong, but it feels like, okay, you went around the world. You're kind of like Bilbo Baggins, right? Or is it Frodo? Or you went to Mordor and back. You've seen whatever, all the different towns along the way. You can see my lack of Lord of the Rings knowledge here, but you've seen it all in the sense of, hey, you've worked, I think now, you can correct me, probably hundreds, thousands of different lenders, right?
Yeah.
You've seen the good, the bad, the ugly. You've seen everything in between. But now you've come back home. Now you're back in the Shire. And that's all I know about Lord of the Rings.
More than I know. So I'm trusting you're saying the right.
Okay, I could be saying random words here. Yeah. Someone correct us if we're getting it all wrong here. But now you're back, and obviously there was a way you did things before. Now you've gone, whatever, you've done the journey. Now you're back. Do you feel like, did you come in here and say, okay, well, now based on all my worldly experience, we're really going to shake things up? Did you kind of come in a little bit more, hey, let's just kind of what we were doing before? It seems to have been working. Let's keep doing it. What's kind of your mindset going into this now?
So I think that the majority is what we are doing before, and we're doing it.
Mhm.
It works, and we're comfortable with that. And
Yeah.
I don't want to reinvent any wheel, right? I think that the crazier you get, the more complex you get, the more difficult you make it, not only for yourselves but for brokers and borrowers, right? So we want to keep this process easy. We want to do the same thing that we were always doing, because we're not the cheapest lender out there,
Sure.
and I think there is a race to the bottom at some point. It always happens. You see these rates being advertised, and we're just not those people. But if you've worked with us before, you've learned that we're extremely reliable. We say we're going to do a deal, we do it. We answer you, fairly quickly on the deal. So you give us a deal today, we'll tell you if we're going to do it, yes or no, like right away. So you're not wasting time by sending us a deal.
Yep.
In terms of like loan sizing, a lot of lenders have caps. So they won't go over $1 million or $1.5 million. If we like to do a deal, we're going to do it. And that doesn't mean that we're going to write a $50 million check, but our largest loan on our books right now is just shy of 11 million.
Wow.
Our smallest loan is probably 40,000, and we'll go anywhere in between. So it's the idea of like, if it's a good deal, we're more than likely going to do it. Right.
Yeah.
And that's important to the brokers because, I think when there's a big range of what lending companies do, brokers they'll submit anything. Right. And
throw it at the wall. Yeah. See what's
exactly. And like, what I don't love about that, number one, is it's just a waste of everyone's time. But I don't like telling a broker no, and if you say no 2, 3, 5 times on deals that you would have never done anyways, they just hear no. Yeah. Right.
These guys don't do, they're not. Yeah.
It's like, you can't, exactly. You can't even, say, well, let's know because of X, Y, Z. And you can say that in that period of time, but after a week goes by, they just remember no. Right. So
because they've tuned you out, right?
Exactly.
Everything after that is
exactly. So it's
interesting.
I always say, like, to our BDMs, like, it's so important, like, to educate the brokers on what we love to do. And if you could submit a deal with what we like, more times now we're going to say yes to the deal and fund it fairly quickly. And, one of the things I always used to say, and, I'm saying it now again, because I'm kind of back out there and we're,
Sure.
we're moving and we're shaking,
Yeah.
is I always say to the broker, like, send us one doable deal. Don't send me the deal that's been on your desk for 8 weeks that 50 other people have said no to.
Yeah.
But am I really going to say yes to it after that? Like, it's probably not a great deal, but send us one doable deal just so you can see our process and how we work and how quick we are and how organized we are. Because I feel like when you do, you're probably going to call us again.
Sure. Yeah.
We just make it easy.
Yeah. No, it's interesting. And I think maybe just to bring it back to what's interesting, I think a little bit is that, hey, bring it back to what we were talking about before. You guys are using Automator and all the tech stuff, but that didn't even come up in your kind of explanation there of what differentiates you guys. And I think it's interesting, right? It's just more that, for people like me, I'll admit it, I'll put my hand up where I sometimes like to say, tech, whatever, we're going to change the world, this and that. But, some things don't change, right? Some things don't change, like, hey, just good customer service, right? Very clear messaging, right? Marketing is so key, right? Getting out there and doing that. And like the Peter Thiel thing, he is a tech guy, but he says the tech side can actually be easy. And this is his words, not mine. I'm not saying tech is easy, but the real tricky thing is good distribution, being able to get there. And if you can do that, great. But that's really the trick. I think, it's interesting. I guess maybe I'm curious, I think for a broker, for anybody, it's kind of, they'd love to have a lender where they can go to and just any type of deal, any shape and size, they could just kind of throw it at them and, maybe they do it, maybe not. But obviously you guys now, what it sounds like, and you can maybe describe to me the type of deals you like, but you went extremely niche, right? You went extremely narrow. Did you, and correct me if I'm wrong, but what was kind of, I guess, the strategic rationale of keeping it narrow? Was it so brokers know? Was it for operational efficiency internally? Was it just the risk that you guys were willing to take on from just a balance sheet perspective? Like, where did that come from, I guess, that strategy?
So early on in the lending company that we had, we went kind of everywhere.
Yeah.
Right. So we would be in other provinces. It didn't really matter. We would call realtors out in Nova Scotia and say, like, what's this house worth? Because I don't know anything about Nova Scotia real estate, right? But we would call trusted people who would give us an answer and we would be okay to go there. But as we started to raise more capital, more sophisticated capital,
yeah,
they didn't want to go to Nova Scotia. They didn't want to go to Saskatchewan. They didn't want to go to, wherever. They wanted to stay at home.
Yeah.
So we're GTA based lenders and we could drive to every single property and go and look at every room in the house to make sure that
love it.
It's there. It's standing. My father, it's funny. My father's a real estate lawyer. He always tells me about a deal that came across his desk someone was doing.
Yeah.
And no one went to go see the property.
Okay. Yeah.
There was no property. There was an address. And if you drive to the address, there was no house there.
Yeah. That's hilarious.
But there was an appraisal with a house there.
Oh my God.
Right?
Yeah.
So for us, it's important. We want to go see the properties. We like GTA real estate. Just from a risk perspective, we know the market. Our partners are in the real estate business for a really long time. And that's just what we're comfortable with,
Yeah.
Have we gone a little bit outside the GTA? Sure. We've done a deal in London. We've gone up to, cottage country. But again, on assets that we understand, or it's just like such a low loan to value and there's a lot of equity that we just feel safe with it.
You can take the risk there.
So it wasn't like a strategic thing to go to the brokers and say, like, this is what we want. It was, it's our money.
The risk forward kind of
exactly.
Interesting. Well, listen, Lawrence, we're kind of coming on time here, and this has kind of flown by, and I really appreciate all the perspectives from tech to philosophy to lending, everything we touched here. I think there are a lot of brokers kind of listening to this, and so what would be kind of, if you had one message to them, it can be Automator related or Golden Bell related. What would be the message, and where can they find you if they want to learn more? Where would be the best place to go?
Well, as far as Automator related, I don't know if I'm allowed to make an official statement, so I will stay away from that. From that one.
All good.
But Golden Bell Capital related. I mean, if you worked with us when we were called JV Capital, same deal, right? So just new email addresses, a new name, same funding sources, same people. I mean, listen, like I said earlier, like, send us one deal. One doable deal, get a good sense of how we work. And I'm telling you, like, you will probably send us more business. But yeah, I mean, it's You have good deals, we're happy to fund them. We don't even need appraisals, right? We do all evaluations in-house. This is not like line of credit money where you need certain credit scores and, certain parameters. This is cash, right? So if we like the deal, we're going to do the deal. We're going to close it quickly.
Yeah. Anyone listening, prove them wrong. Yeah. Send them one deal. Prove Lawrence wrong. And if you do, I'll get an email, I'm sure, but I doubt you will. So there you go. Well, listen.
Love it.
Yeah. Appreciate it, guys. Everyone listening, of course, but Lawrence, your time. This has been awesome. Really, really appreciate the conversation. Yeah. I guess, we'll stay in touch, but if anybody wants to get in touch with you, I guess I'm sure that your website finds you on LinkedIn, that sort of thing's probably.
I'm on LinkedIn. You can email me, lawrence@goldenbellcapital.ca. We're at the trade shows. You'll see us around. And it's the deal.
Amazing. Thanks, Lawrence.
Appreciate it, Tom. Have a great day. Thanks for having me.
Yeah, bye.